Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. Here's what's coming up on today's programme. Softer data. Global stocks head for a 10-week high. That's as US jobs and inflation reports fuel optimism the Fed is near the end of hiking rates. JPMorgan, Citigroup and Wells Fargo kick off earnings season with investors focused on deposit flows from smaller lenders. Plus, LVMH breaks into the world's top 10 companies by market value on the strength of a massive beat. Sales at Hermes also surge as shoppers snap up pricey Birkin bags. There is a redhead crossing the terminal right now around OPEC+. I'm just going to get that for you because, of course, we focused in on what's happening with the oil price and the moves higher. OPEC+ cuts intensify the, quote, siege on oil consumers. This is a warning from the International Energy Agency, the IEA. This is a redhead crossing the terminal. OPEC+ cuts intensify what they are describing as the siege on oil consumers. Of course, this following that surprise cut by OPEC+ that has led oil higher and aiming now for its fourth straight week of gains. Brent currently trading at $85 a barrel, just down 0.5%. We'll keep across these lines from the IEA if we get any more coming through. Of course, there's concerns about the inflationary impacts of this move, even as OPEC+, of course, for their own reasons and their own budgetary reasons, want to see oil of at least $80 a barrel. Goldman Sachs, by the way, they have a price forecast on Brent of $95 a barrel by year end. But certainly for the US and others, it's the inflationary impact and the cost on gasoline prices that is a concern. Let's check in on these markets then as investors weigh up what is looking like and has been characterized, at least by some, as a sweet spot in terms of the data coming through from the US. Yes, jobless claims picked up a little bit, but there's certainly stability in the jobs markets. Producer prices, though, really came in sharply low. We're going to get the details from Bradley Titel in just a moment, but certainly the investor reaction yesterday was positive and the follow-through for European equities is being held as well. The Nasdaq ended the day up 2%. Luxury and the earnings picture continues to support. We're getting banking earnings out later today. Here's the luxury picture then, with Hermes building on the gains that we saw from LVMH. LVMH now nearing a $500 billion company. Hermes also posting revenues for the first quarter much higher than expected. The estimates were for 16% increase in the first quarter. They came in at about 23%. And they talked, executives, about having essentially a sterling Chinese New Year. And it is the Chinese consumer that is all powerful now for the luxury space. And the read across more broadly across that sector. LVMH continuing the gains, 0.7%. Now, we touched on this. US producer prices fell in March by the most since the start of the pandemic, with jobs data also slightly softer than expected. Let's bring in our markets reporter, Valerie Titel, then, for the detail and the analysis. How do the markets trade these numbers? Was it a big surprise?
Look, yesterday was very much a soft landing trade. It was a risk-on trade after these numbers. As you mentioned, PPI came in weak. It fell the most since the start of the pandemic. The month-on-month number down 0.5%. The consensus was for a flat reading, so it really was a lot lower than expected. And then those jobless claim figures you mentioned, yes, they ticked up, but it was mostly expected and mostly came due from California, and that's based on the tech layoffs that we know about months ago. So the job market seems stable. Inflation seems to not be surprising on the upside anymore. That's a good signal for the Fed, a good signal for the soft landing. And we were risk on yesterday. The dollar weakened broadly versus other currencies, and equities rose. As you mentioned, the Nasdaq was up 2%. The euro also hit a high for the year on that dollar weekend.
Yeah, 110 on euro dollar. And of course, we're going to be scrutinizing the bank earnings out later today. And that ties in, of course, to the Fed support that's come through. Is the Fed still the backstop for this beleaguered banking sector, or are they able to walk back some of that support?
Look, we got the weekly balance sheet data from the Fed, and it showed that the emergency lending that the Fed does has fallen now for 4 straight weeks. And their new lending facility, the BTFP facility, had its first week of falls. So it's looking like this is another sign that the banking sector is stabilizing. It's not getting any worse. The other thing we had out yesterday was flows into money markets. As we know, the money market flows have been rampant in the past few weeks, accelerated by the banking turmoil, but they are starting to slow. That is yet another sign that the deposit flight that a lot of these small banks are suffering from is starting to stabilize.
Valerie Titel, thank you very much indeed. From our markets team, of course, scrutinising the data that came out of the US and the read across for the Fed and that support for the banking sector. Let's bring in now Shamala Wheeler, Chief economist, Whelan, I should say, chief economist at Westbourne Research Services. Shamila, thank you for joining us this Friday. Is this the sweet spot then for the Fed and for investors?
Let's put it this way. It is a sweet spot for the moment, or rather you could call it also the calm before the storm.
What is the storm?
That we are headed for a downturn. I think the only two questions are, is it going to be a short and sharp one, or is it going to be a grinding and prolonged one? Because what is clear is the global economy is slowing. It's going to get worse as the US and Europe slip into recession and as the Chinese reopening boom peters out.
And so on the balance of risks, where do you land on that then? Is it short and shallow, or is it going to be deep and prolonged? There's a lot of uncertainty, I know, but where would you edge at this point?
Ooh, good question, Tom. I would edge towards grinding and prolonged, simply because I think the Fed, even though neither the Fed nor the ECB has won the inflation battle, they are not going to hesitate to continue raising interest rates, and it's just another 25 basis points.
OK, and part of that battle is around core inflation. Do you have any clarity on when we can start to see significant and sustained breakdown in core inflation? How long is that going to take?
That is the million-dollar question, and I think it's going to take a while. So my view has been for the last 2 years that we are never going back to pre-COVID inflation rates. Inflation for the next sustained period will be 4 to 5%, and it boils down to not even just core inflation; it's about the amount of liquidity that's in the system. Right, the Fed's balance sheet is about 101% larger than on the eve of the pandemic, and this was before SVB and Signature. And now, half of the contraction since April last year in the balance sheet has been reversed, and even before that, Bank of Japan was increasing its balance sheet. So if you take the Fed, the ECB, and the Fed together. Sorry, the ECB, the Fed, and the Bank of Japan together, they've added over 400 billion through their asset purchases since December.
Just since December, 400 billion plus. That is remarkable. It's huge, and the support is there, clearly, in terms of liquidity. But there is also the scrutiny on credit conditions and tighter loan conditions from the banking sector. And clearly, we're going to be listening out to the executives and the banks later today on that. To what extent do you, again, have a clear steer on how much work has been done on that front, how much work the banking crisis and those tighter credit conditions have done for the Fed?
Well, I think it's a bit of a moving feast, right? It's a given that, lending standards are going to be tightening, banks are going to be reluctant to lend, the whole credit market is going to be tightening, and that is a knock-on effect on households and on companies at a time when the cost of servicing existing debt has already gone up.
Tell us why you're so bearish on the outlook for China. The exports came in higher than expected. The consumer is clearly, at least at the high end, supporting the luxury space. We had the PBOC Governor Yi Gang coming out later or earlier this morning saying that things are looking a little bit better in real estate. And you say that you're already starting to look at a fade of the reopening play for China.
So, Tom, don't get me wrong. This year is looking good, right? We've got the reopening boom. We've got, if you look at the macro policy stance, fiscal policy is easy, monetary policy is easy, inflation is extremely low, which means, you're not getting by a long shot, any kind of hit to real purchasing power like you're getting here in the West. But the underlying problems of the Chinese economy hasn't gone away, right? There's still the debt problem, especially in the corporate sector and the real estate sector. There's still problems in the property market. And the biggest one is that, quite simply, the geopolitical tensions and the tech war and the US tightening the screws there. And that's what makes me bearish about China.
And that's taking us through to 2024 and beyond rather than specifically this year. There was always the concern that China would produce an inflationary impact as well as supporting the economy of Europe. We've heard from ECB officials just over the last 24 hours, again, reiterating the determination, at least amongst the hawks, to raise again. What are the risks? Can the ECB, how much higher can the ECB go? Does the slightly softer China give them scope to go higher on rates?
Not really, because the ECB's got the same problem as the Fed, which is excess liquidity. And if you believe, like me, that inflation is always and everywhere a monetary phenomena, price will be the equilibrating factor between supply and demand. They've got the liquidity there, right? And the biggest problem is core inflation. And they're not going to get core inflation down just through China imports.
So what do they need? Another 50 basis points and stop? Or do they need
I think because it's going to become a trade-off between inflation and growth. they're going to accept higher inflation rather than sacrifice growth and try to achieve that soft landing that everybody's talking about, which I think is going to prove quite elusive. So another 25 basis points out of the ECB, 50 max, but I'm more veering towards 25.
25 probably from the ECB, and then they have to accept this higher inflationary picture that you've outlined for us. Shamila, thank you very much indeed. Happy Friday. Thanks for joining us in the studio to walk through some of these key issues affecting these markets and breaking down the future in terms of the outlook for the global economy. Shamila Whelan, Chief Economist at Westbourne Research Services. Coming up, the FBI has a suspect in custody for the massive leak of classified documents. We bring you more on what we know so far in that dramatic story. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now, to the story of a 21-year-old US Air National Guardsman, 21, arrested over the massive leak of classified documents. There are the pictures on the screen. Officials have said those files include maps, intelligence updates, and the assessment, and timely assessment, of Russia's war in Ukraine. Let's get the details then from Bloomberg's senior reporter for international affairs, Mark Champion. Mark, what do we know then so far about the alleged leaker?
So, as you said, he's 21, which is extraordinary. He was a National Guardsman in Massachusetts, quite low level. He needed security clearance because he was at a kind of node for the collection and distribution of intelligence, real-time intelligence for the Air Force. And yet, what is absolutely extraordinary is that he had access to these really high-level sets of documents that were at policy level and designed for the, the Joint Chiefs of the Staff. So, there's going to be some questions to answer there. He leaked them onto a chat room for, video games, a group that he knew quite well. So what his motivation is, who else might have been involved? These are the kinds of questions that they will be trying to investigate.
Yeah, we still don't know, do we? I mean, speculation previously as to whether the Russians were involved in this. It seems, at least on the surface, that this guy was not a Russian asset. Again, the investigation continues. Yeah. But it could just be that the kid was trying to get attention in his gaming group online, which is kind of remarkable.
On the face of it, that is what happened.
Right.
They will have to investigate to try and figure out if anything else did go on. There's also, there was a first moment when the documents were leaked, then the documents moved on to other sites, and at some point, some of them were doctored. So there may be different layers, where different people got involved.
So what is the response? What's the likely response from the Pentagon, from intelligence officials to close down some of these gaps, seal off these leaks? What kind of questions does it raise about the way that the US handles not only their intelligence, but the intelligence of their foreign partners, allies, and adversaries?
Absolutely. I mean, it's not the first, rodeo for the Pentagon when it comes to these kinds of leaks and the embarrassment. You remember the Snowden affair. What exactly they'll do, whether they can be more effective than they were last time, is not quite clear. But it clearly does raise questions about the compartmentalization of intelligence. It shouldn't be too shocking that someone fairly young in the military did have clearance to do that kind of job, but what did his clearance allow him to see? And I think that will be the question that's asked.
OK, Bloomberg's Mark Champion, thank you very much indeed for the latest on that leak story and the implications for the Pentagon and the intelligence apparatus of the US. Now, coming up, slightly switching focus, shares of Hermes higher today after it posted a beat on sales this morning. That's after yesterday's stellar earnings, of course, from their rival LVMH. But can the momentum last? And to what extent is China and Chinese consumer demand the pillar for luxury going forward? This is Bloomberg.
Our expectation is that inflation will be conquered over time. It's not going to happen immediately, but if you go into 2024, you're going to see inflation around the world getting much closer to central bank targets.
I believe we can get inflation under control, but I don't underestimate the challenge because just as in the United States and the EU, core inflation, underlying inflation, is still between 4 and 6%. So there's still a lot of work to do.
We all expect that the reduction in energy prices and other input prices will pass through to retail prices in the coming months. We will have surely volatility in this part of the year, but I think the level of inflation will be much lower than last year's, and that trend is confirmed in discussions we're having here.
Some of the key voices then from our coverage of the IMF meetings this week, with a particular focus there on inflation. Let's get the Bloomberg First Word News now with Leanne Gerrans. Leanne.
Hi, Tom. A health analytics firm is warning there's a more than 1 in 4 chance a pandemic as deadly as COVID-19 could hit the world within the next decade. Airfinity says climate change, growth in international travel and the threat posed by zoonotic diseases are all contributing to the risk. Now, Brazil's president is calling on BRICS nations to come up with an alternative currency to replace the dollar in foreign trade. Lula da Silva's remarks come ahead of a meeting with Chinese President Xi Jinping today. Brazil and China have taken steps to make it easier to settle their foreign trade operations in yuan and reals. The French government says around 380,000 people took part in a 12th day of protests against President Emmanuel Macron's pension reform plans. Protester numbers from sectors including transport were lower than last week, with the Paris metro and international train services like Eurostar operating almost normally. France's Constitutional Council will issue a ruling on that law this evening. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Tom.
OK, Leanne, thank you very much indeed. Just checking the price and the stock action around Hermes. Gains of around 1%, so gaining today after, of course, reporting a 23% jump in first quarter revenue. That was versus the estimates of about 16%. The maker of Birkin and Kelly bags says it had, quote, a very good Chinese New Year and outperformed its rivals there in the final 3 months of last year. Let's bring in Andrea Felsted now, our Bloomberg opinion columnist covering consumer goods and the retail industry and the luxury space. Andrea, thank you very much for joining us in the studio. What is going on? Can the momentum that's coming through from China be sustained for these luxury goods makers?
That is the question. So far, so good. LVMH said the other day that the demand, it wasn't frantic, it wasn't excessive. That indicates that it's sustainable and it's gradually improving. That is what is needed to justify the optimism that's reflected in the share prices.
So it could be sustained because there's some pent-up demand, arguably, from those Chinese consumers. On the flip side, is the US looking vulnerable?
Yes. All the data points indicate that the US is slowing. Now, it's really been the US that has been one of the key drivers for luxury over the last couple of years, while those Chinese consumers have either been restricted or more cautious. What we need is China to pick up the bling baton from the US, because the US is slowing, and it's really those younger, more aspirational shoppers that perhaps had crypto gains, stock market gains, stimulus checks, and they spent those on designer sneakers, Gucci handbags. Those inputs aren't coming through, so they are reining in their purchases slightly.
We talked about the Birkin bag, and they sometimes, the price to like tens of thousands of dollars. What is the breakdown in the luxury space? Is the slightly more, quote-unquote, affordable luxury that's powering these gains, or is it the top end stuff?
No, it's really the top end. In more uncertain times, you have a flight to quality. What has also happened is, over the past 3 years, the biggest brands, the most high-profile brands, have got stronger. Louis Vuitton, Dior, Chanel, Hermes, they've all got stronger despite increasing the prices. It's those secondary names, although Prada has had a great run, young people are discovering Prada, but it is those bigger brands. So you might buy 2 handbags a year, you might buy a Louis Vuitton and a Burberry. Things are a little bit tighter, so you just buy 1 bag a year, but you buy the Louis Vuitton and you perhaps spend a little bit more on the Louis Vuitton, you don't buy the Burberry. That's what we will see. OK,
Andrea Felsted, thank you very much indeed, breaking down in granular detail there what is happening across the luxury space. Let's check in on these markets. Luxury, of course, is a component there, and the CAC 40 has been a clear beneficiary on the back of what's happening with LVMH and Hermes, the CAC currently up 0.2%. More broadly across European equities, you're actually seeing now again holding up of 0.3% this Friday. Of course, the data picture coming out of the US supportive in terms of the view that the Fed now can consider a pause. The futures in the US, though, edging down by 0.2% for the Nasdaq futures, but that's in the context of a 2% gain for that tech-heavy index yesterday. The Bloomberg Dollar Index slightly softer. The Euro Dollar 110, the highest level in about a year. Stay with us. US banks next. This is Bloomberg. Softer data. Global stocks head for a 10-week high as US jobs and inflation reports fuel optimism. The Fed is near the end of hiking rates. JPMorgan, Citigroup and Wells Fargo kick off earnings season with investors focused on deposit flows from smaller lenders. Plus, LVMH breaks into the world's top 10 companies by market value on the strength of a massive beat. Sales at Hermes also surge as shoppers snap up pricey Birkin bags. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now, three of the big US banks do kick off earnings season later today. JPMorgan, Citi and Wells Fargo are all due to report. There will be, of course, a big focus on deposit outflows as investors continue to digest the global banking turmoil. Let's bring in then the expertise of Susannah Streeter, Senior Analyst at Hargreaves, Lansdown. Susannah, good morning. Happy Friday. Thanks for joining us. Where is your focus going to be on what is arguably one of the more interesting earnings quarters for this banking sector?
Well, it certainly is going to be interesting because the expectation is, on balance, if you look at the likes of JPMorgan and Wells Fargo, because of the increase that we've seen in net income margins, net interest margins, that will mean that there's going to be a real uplift to earnings. But it is going to be the outlook that I think investors are going to be fixated on because, of course, since the banking scare erupted, there are so many questions which have now been thrown into the mix, not least the forecast of a mild recession from the Fed, but also this deposit flight, which on one hand appears certainly to be bolstering the bigger banks. But on the other hand, there is also evidence that there's been deposit flight out into, say, money market funds where investors have been chasing higher returns. And so that may also be something to watch as well.
Yeah.
So this is going to be a really interesting bag, I think, of results to go through.
Yeah, and as you rightly say, there's two sides to the deposit story. Can banks, so can the big banks, can the likes of JPMorgan, Wells Fargo, Citi, can they look through some of that deposit flight, or are they going to have to react? Are they going to have to raise their own deposit rates to attract and hold on to those consumers, or can they rely on continued deposit flows from the smaller lenders?
Well, I think what was really interesting was the comments from the Bank of England governor this week at the IMF meeting, suggesting that although there is no systemic risk in terms of the bigger banks in the UK, but the same could be said in the US as well, due to the capital buffers that have been built up because of the changing situation now in digital transfers and the immediacy of just how quickly money can be pulled out if rumours swirl, that potentially banks will need to build up even bigger capital buffers to withstand future volatility. So with that in mind, we may certainly see much more of a defensive strategy coming from management already to offer much more attractive rates to stop that deposit flight, because the feeling is they can't rely solely on those deposits coming from the smaller lenders.
OK, leaning into a defensive strategy in light of what has unfolded across the banking sector. It was interesting to see that Chinese banks this morning also looking to raise additional capital. Susannah, when it comes to net interest margins then for the big US lenders, how much of a ballast will that be in the quarters ahead?
Well, it still will continue to be a ballast, not to the same extent that we're likely to see in this quarter. But obviously, it certainly does depend on just where rates are going to go from here. Likelihood is that the pause button, when it's pressed, will be pressed for some time. So they should continue to be a ballast. But as I was indicating, if equally banks want to attract further deposits, there will be pressure on those margins going forward. And also the expectation is that, cuts will come. I don't expect them to come, as some in the market watchers believe, anytime soon. I think it's going to be pushed into the long grass. So that could provide a little bit of help. But the other aspect to watch as well is the prospect of more loans turning bad and whether banks have to set aside even more provisions for that.
On that point, what does history tell us about the time frame for those loan loss provisions and that pickup in potential defaults? As we weigh up those recessionary risks, do we have a sense of when the default question is going to be front and centre for the banking sector?
Well, certainly there is always a lag, and we're seeing this, for example, in credit conditions report came out in the UK, indicating that there has been this much more reticence to lend because of the expectation of more difficulties in the UK economy, and the same may already have started, and we do have evidence of that. For example, Wells Fargo and JPMorgan have been kind of cutting exposure to commercial property because of concerns within that sector, at least being more stringent on the terms that they're offering, and that process is expected to have happened, started happening last year, even though perhaps those problems haven't so far materialized to the extent that some fear. So certainly there is a lag. It could be a year or so, and that is why preparations have to be made much sooner in advance of that. And of course, as we've seen during the pandemic, many of those bad loans didn't materialize, which then went to bolster banks' earnings in the quarters that followed, as it was able to take back some of those provisions. So certainly I do expect a bit more of a defensive strategy, though, right now to be going on.
OK, more of a defensive strategy. We'll look for that for the executives from the key US banks. Susannah Streeter, thank you, senior analyst at Hargreaves Lansdown, with a preview, of course, JPMorgan, Wells Fargo and Citigroup kicking off the banking earnings picture later today in the US. We're seeing live pictures now of the Brazilian president outside the Great Hall of the People in Beijing, of course, meeting with his Chinese counterpart, Xi Jinping. The Brazilian president's trip, by the way, to China is seen as key, really, to bolster Xi's credibility on the world stage, as, again, he seeks to try and build momentum for his proposal, his peace plan, that's been dismissed in the West, to halt the fighting in Ukraine. Lula, by the way, arrived yesterday ahead of a 4-day visit. There he is, on the red carpet, meeting Chinese officials, more importantly, standing alongside his Chinese counterpart, President Xi Jinping. The diplomatic charm offensive from Beijing continues after the visit, controversial as it was, by French President Emmanuel Macron and, of course, European Commission President von der Leyen last week. But there you see Lula alongside his Chinese counterpart, the red carpet and the steps leading up to the Great Hall of the People in Beijing alongside Tiananmen Square. Plenty more coming up. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now, economic data released between now and the Bank of England's May meeting may hold the key to whether the central bank will hike rates again. Jobs data is due on Tuesday and March CPI the day after on Wednesday. Let's get the analysis then and preview from none other than Dan Hansen from Bloomberg Economics. Dan, the UK's problem around the participation rate in the labour market, any sense that we're going to see an improvement in the data coming up next week on that front?
Yeah, so you're right. That goes to the heart of the issue the UK's been facing. We've had this weak supply of labour in the UK. We've also had strong demand, and that's combined, and we've seen wages rise very, very fast. I I think looking to next week in the data, we saw some improvement in the participation rate in last month's data. We expect that to continue this month. What I think is going to be interesting, though, is actually the demand side, because the economy is doing a little bit better. Demand's holding up a little bit better. And sort of that combination of still relatively weak supply, strong demand, we think the unemployment rate is going to stay steady at 3.7%. The interesting thing for the bank will be wages. And we think there's going to be this continuation of this quite sharp fall in the wage growth numbers. So you're going to have this balance that the Bank of England is going to be looking at. You've got a tight labour market still, but there's evidence that wage growth is beginning to cool and coming down closer to the level that is consistent with the bank's 2%.
And that's obviously something that they'll welcome, even in an environment of 3.7% unemployment, which of course is historically still pretty low.
Yes.
When it comes then, we can link that obviously to the inflation picture. That data out on Wednesday. Obviously, when you look at the US, PPI, CPI, inflation is starting to moderate, even as core remains a concern, and there's the grind lower, of course, when it comes to the US price pressures. But the picture is becoming clearer that inflation is starting to moderate in the US. Can we make the same call here in the UK?
Yeah, I mean, it's a big call to make on the back of the February data where we saw this big spike up back to 10.4%. Everyone was expecting a slight moderation. We think there will be a moderation this month, partly because we're going to get some favourable base effects on fuel and the like. So we think you're going to get a fall to 9.8%, but you're still up near 10% here in the UK. Core should ease a little bit. I think the thing with the difference between the UK and the US, when you're making that comparison, is that we're going to take a little bit longer to see the energy base effects come through. We're going to get a big fall in April in the CPI numbers, and then because we've had this fall in wholesale gas prices this year, energy as a whole, we think, could strip as much as 4.5 percentage points off the headline rate by the end of the year. So if nothing else, you get from 10.4 now down to 6% just through energy.
That's huge. 4.5%.
Yeah, it's a huge amount.
You're taking us through to the end of the year. Take us through 2 years then. What is the inflationary picture? Here's no challenge there.
No, not at all.
You can do this. What does inflation look like over the next 2 years here in the UK?
So I think the picture is, and it goes back to this point I made about energy, you're going to have that coming through the headline numbers, and that's going to push down on the headline figure quite significantly. We think by the end of the year you could be around 3% on the headline rate. That's in contrast, and you made the point about core inflation, sticky core inflation. That's in contrast to core, which we think will be close to 4.5%. And we don't think core will be close to 2% until the end of 2024. So there's a long grind down for core. The headline rate is going to benefit, though, from these movements in energy prices and the base effects we're going to get into the end of this year and into 2024 as well.
OK, Dan Hansen, thank you very much indeed. With the important preview of that data that comes out next week out of the UK. Of course, Dan Hansen from our Bloomberg economics team, a view there that maybe CPI on Wednesday comes down to 9.8%, and watch for that participation rate when it comes to the labour market here as well. We're going to be covering, of course, all things UK every week on Thursdays, 9:30 a.m. London time in our half-hour special. Let's get the Bloomberg Business Flash now with Leanne Gerrans. Leanne.
Hi, Tom. Ferrovial has won backing for its plan to fold its parent company into its Dutch unit, paving the way to move its headquarters to Amsterdam and eventually pursue a US share listing. Shareholders of the Spanish builder agreed the plan at an AGM in Madrid. The move has infuriated the government of Prime Minister Pedro Sanchez. Now, Boeing is pausing deliveries of some 737 MAX jets after learning of a manufacturing issue. The problem, which doesn't affect the safety of planes, involves some of the fittings that attach the plane's vertical tail to the rear end of its fuselage. It's likely to impact a significant number of undelivered aircraft, as well as those stored at Boeing, a setback for the company after a long global grounding for the MAX. India's second biggest software services firm, Infosys, has forecast sales that lagged estimates. The company said it expects to post revenue growth of between 4% and 7% this year. The software firm's US-listed shares fell over 9% after the outlook prompted Citi to downgrade the stock. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Tom.
Leanne, thank you. Now to France, where the top constitutional body is set to rule on President Emmanuel Macron's very controversial pension reforms. That ruling later today. Unable to command a majority in Parliament, don't forget, the government used a constitutional mechanism to push through the plan to raise the retirement age from 62 to 64 without a vote in Parliament. The move has triggered widespread protests and strikes across France. For more, let's bring in Bloomberg's Caroline Connor, who is in the French capital. Caroline, what exactly then is at stake? How significant is this decision today?
It is pretty significant because today 9 people called the wise men, although it includes 3 women, will have the power to actually cancel this French pension reform from Emmanuel Macron. They will have their verdict probably around 6 p.m. French time today. They will also say whether this should go through a referendum process that will then require 10% of the French electorate to sign in order to organize possibly a referendum next year. It is unlikely, though, that the Council will reject the reform entirely. Most probably, they will reject parts of the reform, especially the senior index, which forces companies to publish the number of older workers over 55 years old they employ. That could actually go out of the reform. Of course, if the entire reform is rejected, that would be a disaster for President Emmanuel Macron. He would have to start from scratch on this entire pension reform.
Caroline, where do things stand on the protests? Do they continue? Do they continue in Paris? Do they continue across the rest of the country?
You had a few tensions that you just saw in front of the Constitutional Council yesterday on the sidelines of the 12th day of a general strike in France. And you also had a symbolic action by some railway workers storming into the LVMH headquarters on the very fancy Avenue Montaigne, 1 week actually after those same railway workers stormed BlackRock last week. So obviously a lot of symbolic actions expected today, but overall the turnout at these protests has gone down. So basically the number of people protesting has gone from around 1.3 million people at the peak at the beginning of March to less than 400,000 people yesterday. There is another planned action on May 1st, but that is traditionally a lot of protests because it's Labor Day. We'll see, however, if this Constitutional Council decision actually fuels more protest or actually creates a fading down of the action against the pension reform.
So what are the stakes then? What are the stakes for Macron if the council, if this Constitutional Council, the wise men, including thankfully some women as well, if they reject these reforms?
So obviously for Emmanuel Macron would be a big blow because this has been part of his election campaign. This has been part of his entire reform agenda for this second mandate, and he cannot run again in 2027. So of course that would be a big blow that would kind of give some room for the unions to say, we were right, we shouldn't raise the retirement age from 62 to 64. But immediately, obviously, his own position as the head of state of France will remain. However, his Prime Minister, Elisabeth Borne, would be in great danger. She's already obviously facing a lot of criticism on the way she handled this reform, on the way she fought through the reform in Parliament without a vote. So Elisabeth Borne's future is very uncertain, that for sure. And as you can see, a majority of the French still oppose this reform.
OK, Caroline Connor in Paris for us, looking ahead to the significance of that Constitutional Council decision expected, as she said, at around 6 p.m. French time later today. We've got live pictures, I believe, still of the visit by the Brazilian President Lula to Beijing. There you can see him on the red carpet leading up to the steps of the Great Hall of the People alongside Xi Jinping. Of course, 2 major components in the BRICS compact. Brazil, of course, alongside China, and Brazil essential for China in terms of the provision of commodities, soft commodities from things like soybeans, but also, of course, things like iron ore as well. And the investment then from China into the infrastructure of Brazil in terms of that relationship. Interesting to hear from Lula earlier on. This is part of a 4-day trip, saying that maybe the BRICS nations need to come up with their own currency to avoid being at the whims and mercies of the US dollars. You can see the 2 presidents walking up the red steps and the red carpet, the steps of the Great Hall of the People in central Beijing that sits alongside Tiananmen Square. And you can see the military parade and band there as the 2 leaders head up those steps. Again, the first day of a 4-day visit for the Brazilian president as Xi Jinping continues that diplomatic charm offensive. Plenty more coming up here on Bloomberg. Currently, your European markets up 0.3%. The futures lower in the US, down 0.2%. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now, a key story for us today and a focus is US banks. Earnings, of course, kicking off later today with JPMorgan, Citi and Wells Fargo all reporting. Investors laser focused on deposit flows as, of course, investors continue to digest the global banking turmoil that has rippled through that sector. Let's bring in Bloomberg's finance executive editor, Michael Moore, then. What is the biggest thing that you are looking for out of these earnings, then?
I think it's that deposit number, and you have these two conflicting ideas. One was this rush to safety from the small banks to the big banks during the March turmoil, and the other is the search for yield. You know, the fact that people can get, 0.5% in their savings account, but can get 4.5% in treasuries, and what wins out there. Analysts expect deposits to be down at the big banks, but how sharp is that decline? There's also the other questions of asset quality, the investment portfolios, how those held up during these March, swings. So there's a lot of questions for the banks right now.
Any sense that investment banking is starting to turn around?
No, not so far. I think the first half is going to be quite quiet. Even last year when you saw the slump, there were still some deals completing that had started. That seems to have tailed off. So I think, we're expecting investment bank fees to be down 1/4 from what was already a low level. And even trading seems to be quieter than last year. So on the Wall Street side, things are definitely down.
Okay, Michael Moore, thank you very much indeed. Really important day, of course, for the bank earnings and what it tells us about the broader banking sector. Finance executive editor, of course, for Bloomberg, Michael Moore, with a preview of JPMorgan, Wells Fargo and Citigroup and the essential things to focus on, the deposits and to what extent they've drained out of those larger lenders. We have some lines crossing around what is happening with Boeing. Shares there falling after they have paused some 737 MAX deliveries. You can see then Boeing down 4.5%. That, of course, is pre-market. The US-listed aircraft maker down 4.5% on concerns around 737 deliveries and a pause. Across your broader markets, you're looking at US futures down 0.1% on the S&P. Stay with us. This is Bloomberg.
Financial conditions have tightened to some extent, but it's really in the banking sector that we have seen most of the tightening, and that could have consequences down the line for macro activity.
The losses that occurred were a substantial expansion of deposits, borrowing at very low rates at very short periods of time. It's interest rate losses, it's not credit losses that are rolling through.
I think we're not over yet. How bad it gets, we will have to see. I think this problem is more systemic.
This is Bloomberg Surveillance Early Edition with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York and 5 p.m. in Hong Kong. Our top stories today. Bank earnings loom. Deposit levels will be in sharp focus as JPMorgan, Wells Fargo and Citigroup kick off US earnings season. Hermes surges as shoppers snap up pricey Birkin bags. Meanwhile, LVMH's robust results help Bernard Arnault solidify his status as the world's richest person, leaving Elon Musk in the dust. And the Biden administration is going to have a hard time explaining how the biggest US intelligence leak in a decade may have been committed by a 21-year-old Air National Guardsman. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Matt Miller is off today. And Kriti, it is very good to see you this Friday. Soft data out of the US, giving a boost to sentiment, it seems.
Yeah, reunited on the air, Anna. Pleasure to be with you as always. And I think that's 100% right. When you are looking at sentiment here, the banks are really going to change that. Remember, we're going to start hearing from them in just a couple of hours. We are seeing futures down just a little bit on the back foot by about 0.2%, but nothing to write home about yet because we're still waiting for exactly what the banks actually say. It's not just about the turmoil and the banking crisis specifically, but also what, of course, Jamie Dimon has to say. We know he's been both an advocate of the economy, but also warning about an economic hurricane. What does he say to this morning that could move the entire market? So really a word of caution ahead of what could be a very volatile trading day. The bond market, though, Anna, is what's interesting to me. 396 on the 2-year yield, staying sustainably below 4%. It every time keeps touching that 4% level technically and retreats. I wonder, in a world where we're starting to see higher commodity prices, shelter costs also not coming down as quickly as we'd like, how long does that 2-year yield stay below 4%? Or is that it? Is 4% the ceiling for the yield right now, kind of unchanged again, waiting for what the bank results tell us? The dollar, a similar story. Gold, though, another major story I want to talk about because, look, Anna, there's only been 2 times in history where we've gone over 2,000, and we are there right now. The record there for gold prices, 2,060 on spot gold. We're at 2035 right now, lower by about 0.3%, but this is a commodity you want to watch, Anna.
Yeah, it really has been moving in sync, albeit in this sort of opposite direction to the dollar, hasn't it, Chrissy? And that's certainly something we focus in on. So we'll certainly watch the gold price, see if we get any new highs, new all-time highs on that gold price. This is where we are on European stocks then, Chrissy. A broadly positive picture, not as positive as it was yesterday out of Paris, but still we have that driver coming through. So consumer products, the luxury goods side of things, did very well yesterday on the back of those LVMH numbers. Today it's the turn of Hermes. We'll get to that in a moment. So broad-based gains, not in the Dutch market, but elsewhere we see coming through across European equity markets. I mentioned Hermes, and that's one of the companies that is in focus today. This is the luxury handbag maker, luxury silk scarves, of course, as well. The stock up by 1.1%. Again, a story of beating sales estimates as a result of strength coming through from China. But because the sector as a whole rallied so strongly on the LVMH numbers yesterday, price for perfection, in the words of one analyst, it did mean that it was pretty difficult to send the stock higher again this morning, but we have managed to do that just a little bit. And then a couple of Eurozone assets for you. Well, the French 2-year yield and the euro dollar. And really, I put these in here because I wanted to focus on what we've been hearing from the ECB. The conversation around the Fed carries on, whether we get one more hike or not from the Fed. How close to being done are we in terms of the hiking cycle? The ECB story, though, is much behind the Fed, it seems, and a lot of people still talking about whether we get 25 or 50 from the ECB this time around. We've had some hawkish commentary coming through from the likes of Kazaks and Holtzman, and also Klaus Knot giving his lending his name to that list of hawkish comments of late, and the euro pushing up to that 110 level, so worth keeping an eye on that one. Here's Brent crude at 86.10 for the past 30 days then, Chrissy. We've seen quite a lot of strength in the oil markets. We heard from the IEA today. They were saying that the consumer is going to be under increasing pressure as a result of the OPEC plus cut in production that we saw just a week or so ago.
Yeah, certainly something we're keeping an eye on, especially in the context of whether or not inflation actually continues to decelerate, seeing peaks in several parts of the world, Spain, France, Brazil, you name it. Well, we want to go from the macro and come back to the micro, especially stateside. Bank earnings kicking off today, very much in focus. JPMorgan, Citi, Wells Fargo, all due to report. Investors laser focused on deposit flows as markets continue to digest the global banking turmoil and the ripple effects that come after that. Sonali Basak, our global finance correspondent, joins us now for more on what to expect. Sonali, look, it's all about deposit flows. It feels like that seems to be the message from a lot of investors. To what extent is that true?
There are a lot of focuses on deposit flows, especially at the regional banks, but you have to also think about this big conversation Wall Street is surrounding around credit crunch and whether there is one or not. We start with JPMorgan here in PNC, and it's a good indicator of what different types of banks are doing to lend to this economy at the same time when you have analysts expecting charge-offs to start ticking higher. Now, of course, all of this has a potential really to weigh on profitability. I'm also looking for the loan-to-deposit ratio. How much are they lending relative to what they're taking in deposits? But remember, there are other businesses here, Critty, when you look at the big bulge bracket banks here, about what they can expect in terms of trading and investment banking also. So all in all, we're looking at all the numbers in their entirety, but there are a lot of questions about the deposit movements over to the big banks.
Yeah, and in terms of where those deposits go and where people are investing and not, we keep an eye on that, of course, at this point. A Schwab investor, this is according to an FT report, a Schwab investor, GQG, is exiting its $1.4 billion stake. I emphasise that's an FT report, but this is another business that we're watching very closely in this regard.
Yeah, one of the GQG investors had told the Financial Times that it's not an existential threat that they see to Schwab, but a threat to profitability. And we know that there have been movements, really drastic movements here across the industry, from deposits into money market funds as investors search for yield. Now, that has the potential to really impact Schwab's profitability. They report earnings on Monday, and we know that they've seen a significant sell-off in their stock so far this year. With that said, we also have seen other investors, even with that 38% decline, see this as a buying opportunity, Anna. And I think a lot of this is going to be a rate story in terms of when Schwab will really be able to turn around some of its numbers and really also start to feel less pain in its mark-to-market portfolio, in the bonds that are held to maturity. So again, the Ron Barons of the world are seeing this as a buying opportunity, but Monday will tell whether there is more pain to come for a company like Schwab that has certainly seen a significant sell-off this year.
OK, we'll watch the big banks today. We'll watch as the earnings story unfolds, and we'll certainly watch what we get from Schwab. Thanks very much to Shonali. Bloomberg's Shonali Basak with the latest there. And on the banking sector, I should just mention that MUFG out of Japan is giving some quantity around losses associated with the Credit Suisse AT1 wipeout. Remember, that is the class of bonds that didn't do so well as a result of that. And what we've heard from them this morning is around the level of losses that came through. Their MUFG clients lost $700 million in Credit Suisse AT1 wipeout. So some quantity around, some size and scope around the losses there. Now, turning to the luxury retail sector, it's been a theme all week. Hermes quarterly sales jumped as the maker of the Birkin bags continued to see strong demand from Chinese customers. Joining us now for more, Andrea Felsted from our Bloomberg opinion team. She's a columnist covering consumer goods and the retail industry. Andrea, walk us through some of the numbers here, because this feels like it's the same as yesterday, isn't it? Another day of strength in China being demonstrated for the luxury names.
That's right. Again, Hermes beat not perhaps quite as much as LVMH, but it still beat on that China demand coming through. And that's a relief for investors because the stocks have run up so much this year. Hermes up about 35%, LVMH 30% year to date. So that China momentum really needed to come through.
Andrea, LVMH as well becoming the 10th biggest company in the world. That stellar sales beat that we talked about yesterday. What does that mean for the world's richest man? Probably not so great news for Elon Musk.
That's right. Bernard Arnault continues to power ahead on the demand for those monogrammed bags. And it's interesting because he's very much stuck to his luxury knitting. He knows that he is a seller of luxury goods. That's what he's done. He's also broadened LVMH to be not just a luxury company. He talks about it being a cultural company as well. And when you think about Pharrell Williams being appointed as the top designer at Louis Vuitton menswear, you've got the store, the New York flagship for Tiffany reopening soon. That will be another opportunity to bring LVMH to a younger, broader audience in the US. So he's selling culture as much as he's selling handbags.
OK, and he's certainly selling a lot of those, isn't he? Andrea, thank you very much. Andrea Felsted joining us there from Bloomberg Opinion with the latest on the luxury sector. On to US politics, and the FBI has arrested a 21-year-old Air National Guardsman for the leak of highly classified documents. Attorney General Merrick Garland says that Jack Teixeira will be charged with the unauthorized removal, retention and transmission of national defense information. Mark Champion, Bloomberg senior reporter for international affairs, joins us now with more. Mark, what do we know so far about the alleged leaker and what's been leaked here?
Yes, so, I mean, first of all, a lot of focus on his age, the fact that he's a National Guardsman in Massachusetts. It does seem a really remote corner of the Pentagon's empire where this leak occurred. On the other hand, that may be a little bit misplaced. He is at the center of a part of a network that collects and distributes intelligence for the Air Force. And so it shouldn't be too surprising, you know, either his age or the fact that he had security clearance. I think the real question is going to focus around, you know, what he had access to, because these kinds of documents, these were more policy documents, you know, really kind of broad scope. They were designed for the Joint Chiefs of Staff. So, you know, there will for sure be questions about, you know, why he had access to this particular kind of information.
And of course, a lot of questions to your point about just how intelligence broadly is handled. Mark, talk us through some of just the next steps when it comes to how they're going to deal with this.
Yeah, I mean, it's not the first time that they've had this kind of problem. You remember the Snowden leaks and so on. It's embarrassing to the United States. It has, you know, really underscored again that there's a lot, too many people, clearly, with access to too much information within the intelligence network. That was something that was really done in part deliberately after the 9/11 attacks, when it was thought that one of the problems there was that intelligence was too siloed and the agencies weren't talking to each other. Not enough people had access to information. So it may be that, you know, the Pentagon and the agencies, the security agencies in the U.S. are now going to want to sort of swing the pendulum back towards a bit more tight control over who gets to see what.
Bloomberg's Mark Champion walking us through the international stories we need to know. We thank you as always. Now, a look at some of the stocks we're watching in the pre-market when it comes to right here to the U.S. Boeing is going to be a major mover, especially if you are a watcher of the Dow. Now pausing deliveries of some of its 737 MAX models to address a manufacturing issue that doesn't affect the safety of planes in the air. This really has to do with supply chain issues. Take a look at the shares, though, already in the pre-market. As we're waiting for those bank earnings to give the broader market some direction, you are seeing the shares drop almost 5% in the pre-market. That is going to have a ripple effect to companies like Spirit AeroSystems, for example, down even further. They're the ones who supplied the faulty part to Boeing in the first place, and those shares really taking a hit, down about 12%. Remember, it brings up questions about, does Boeing then change its supply chain? And also, what does that mean for future government contracts for Spirit AeroSystems? Remember, a good chunk of Boeing's revenue does come from those government contracts. Lockheed Martin, a similar story. Spirit AeroSystems in the supply chain for both. I want to get a little bit away from the aerospace and defense sector and talk about Tupperware. Don't we always need that, Anna? TUP is the ticker here. Shares actually rallying higher by 10%. A fourth day of gains. They're working on a turnaround plan, and this time employing advisor Alvarez and Marshall to really help them with that. Remember, Tupperware was dealing with a potential bankruptcy, and a big underscore on that. They've really come out and said, look, we are trying to tackle this in a variety of ways, really trying to cut those costs where we can, and it looks like it's something that the market is really rewarding.
Okay, from aircraft manufacturer to kitchen essentials, this show is nothing but eclectic. Chrissy, thank you. Coming up on the programme, Zoe Gillespie joins us, investment manager at RBC Bruin Dolphin. What does she make of the latest data out stateside? Was that due to assumptions around the Fed and where it moves next? What opportunities does she see for 2023? And on bank earnings, we will get into a conversation with Greenwood Capital CIO Walter Todd. He'll bring us his thoughts on the big banks, the smaller banks, the flow of deposits between the two and elsewhere, plus a constitutional decision on President Macron's plan to raise the French retirement age. More on that ahead. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Matt Miller is off. Banks reduced their borrowings from two Federal Reserve backstop lending facilities for a fourth straight week following the collapse of Silicon Valley Bank last month. Here with more is Bloomberg's Valerie Teitel. Valerie, walk us through it.
Yeah, we got this data out after the close last night, Kriti, and it showed a positive picture. The Fed's emergency lending has now dropped for a fourth straight week. And the most important thing is that the Bank Term Funding Program, the BTFP program, that finally saw a drop in lending. That was that Fed's special lending facility they set up that late Sunday night in the aftermath of SBV. This is painting a very good picture that the demand for cash from these small regional lenders is alleviating somewhat. We also got got some more information about the money market flows. Now, money market flows, they have really picked up steam since the banking crisis started back in March. Now, this poses problems for banks because they need to compete with deposits for these money market funds, which yield a lot more than a lot of traditional bank deposits do. But in the data release yesterday, it showed that that flow into the fund, even though it's still growing, it is slowing. It is slowing at a weekly pace. That is the first time in a while that we've seen this pace really slow since that drastic jump back in March. It paints a better picture looking forward for the banking sector in general.
Yeah, that'll certainly be front and centre when it comes to the bank earnings story, won't it, Valerie? That and the tightening of financial conditions where we're seeing it. Now, a week to go until the Fed's blackout period. Will we see a chorus growing around a pause in May? Because increasingly we seem to be talking to guests who, guests and market participants who aren't quite sure what happens next with the Fed.
Yeah, that's right, Anna. And we've heard some quite dovish things from some lesser influential Fed speakers earlier this week. But we do hear from Waller today. He speaks at 8:45 at an event in Florida. There is a Q&A. Now, note, he is a very influential member at the Fed. The big question is, will he echo the comments that Mary Daly gave us a few days ago, echoing the fact that the Fed may not have to hike at the next meeting? Or will he echo more of the New York Fed President John Williams when he said we haven't seen any clear signs of credit tightening and one more hike in May sounds reasonable? I'm going to be listening very closely if he talks about the weight that the Fed is now giving to the hard data versus these softer lending surveys when it comes to showing just how much credit has tightened within the banking turmoil fallout. He speaks at 8:45 a.m. You can follow along live on LiveGo on your terminal.
OK, Valerie, thanks very much. Bloomberg's Valerie Teitel with all the market-moving stories you need to know in terms of the banking sector and the Fed narrative. For more market analysis, check out the Markets Live blog. MLIV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Matt Miller is off today. Let's keep you up to date with news from around the world. Here's the first word. The U.S. is pressing the need for allies to coordinate against economic coercion, not just military threats. This is as Japan prepares to host top diplomats from the Group of 7 nations amid heightened tensions with China. U.S. Ambassador to Tokyo, Rahm Emanuel, saying, quote, that coercion piece is important. China is set to be a key focus of discussions at the meeting. China's mega banks are planning at least 40 billion yuan of bond sales, kicking off a major funding push to comply with global capital rules by early 2025. Bloomberg has learned Industrial and Commercial Bank of China and its 3 closest rivals are planning to tap domestic debt markets to sell a new category of total loss-absorbing capacity bonds as soon as June. Supreme Court Justice Clarence Thomas and relatives sold 3 Georgia properties that include Thomas's boyhood home to GOP mega donor Harlan Crow in 2014. That's according to a report. ProPublica says that Thomas didn't list the real estate sales on his financial disclosure form that year or report his extensive travel financed by Crow that occurred over 2 decades. Dozens of advocacy organizations and children's safety experts are calling on Meta to terminate its plans to allow minors into its new virtual reality world. Meta planning to invite teenagers and young adults to join its metaverse app, Horizon Worlds, in the coming months. But some argue that young people could face harassment and privacy violations on the virtual reality app, which is only in its early stages. Anna, it's a little bit of a scary topic there, especially when we talk about a company like Meta that for a while has been losing that younger demographic, has come under a lot of pressure with Instagram already, especially at a time when Twitter, Snapchat, TikTok, all under even government scrutiny.
Yeah, I have to say, for parents, it's turning into an almost full-time job to try and keep across all the parental controls that are required to allow children to participate on the bits of the internet that exist already, let alone the metaverse. But yes, you're right, and it's certainly a sector that has and will continue to face a lot of scrutiny, Kriti. We all remember the 2021 whistleblower that was critical, in particular around Instagram, of the Meta story and the way that it protected, in particular, girls using that platform.
Yeah, it's really important. And then remember, Meta also has things like WhatsApp under its umbrella and potentially more acquisitions in the future. So a lot of scrutiny there.
Yeah, coming up on the programme, we'll get back to the markets. Zoe Gillespie joins us, investment manager at RBC Brewin Dolphin. We'll get back to the markets conversation. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. Bank earnings loom. Deposit levels will be in sharp focus as JPMorgan, Wells Fargo and Citigroup kick off US earnings season. Hermes surges as shoppers snap up pricey Birkin bags. Meanwhile, LVMH's robust results help Bernard Arnault solidify his status as the world's richest person, leaving Elon Musk in the dust. And the Biden administration is going to have a hard time explaining how the biggest US intelligence leak in a decade may have been committed by a 21-year-old Air National Guardsman. I'm Anna Edwards in London with Kriti Gupta in New York. Matt Miller is off today. And the softer data then, Kriti, lifting sentiment for risk assets yesterday, but those same risk assets, certainly US futures, fading a little this morning.
Yeah, just a little bit. I mean, it's all going to be about bank earnings, as you mentioned, Anna. And of course, that's going to have a little bit of a wait and see approach when you look at what futures trading is really going to how it's going to evolve in the next few hours. Remember, we still have about 4 hours before the actual opening bells here in New York. And what that means for futures right now is simply that they're down about 0.2%. But again, amid light volume. So you aren't really seeing a ton of participation in this market yet. Anna, give it an hour or so. It'll completely turn around. A similar story in the bond market. The 2-year yield at 3.96. Remember, 4% is that key technical level for the 2-year yield. How long can it stay below? It's already tested about 4% again by about 3 times. So maybe a 4th time is a charm. We'll find out. And of course, amid that low volume, remember, the dollar is really taking its cue from 2 things. 1, what's going on in Europe, with the euro really driving the dollar in a lot of ways. And 2, what's going on with that 2-year yield. Lack of direction in the 2-year yield really keeps the dollar at the whim of the euro right now, and I should say other European currencies as well. Gold is the one that catches my eye. We love to do a commodity check here, Anna, but for me, 2035 on gold, we are very, very close to the 2060 all-time record high of gold. At the same time that the bond market is catching a bid, gold is as well. We're, of course, going to see how long that lasts and whether we, of course, test that all-time high again or even make a new record high. That's the macro, and I want to hit the micro really quickly. Boeing is going to be a very big player in today's trading. You're already seeing the shares drop just shy about 5% after pausing deliveries of some of their 737 MAX models to address a manufacturing issue that doesn't affect the safety of planes in the air. Now, the ripple effect there goes to names like Spirit Aerosystems, down about 12%, already seeing the pain there. They're the ones who supplied that faulty part to Boeing. The concern here is, look, if you're not going to get that government contract, it just takes one slip up to start missing those. What does that do to your bottom line? That's really what's getting priced in here. To the upside, though, we do have some gains here. Tupperware up there about 13%. TUP is the ticker there. The 4th day of gains after a report that they're working on a turnaround plan with turnaround advisor Alvarez and Marshall. So a lot of moving parts on the micro front, Anna.
Absolutely. A lot of moving parts here in Europe as we wait for the bank earnings season to get underway then, Kriti. And European equity markets are moving higher as we start to get some earnings coming through here. Certainly some sales updates today. Ongoing focus on the luxury sector for Europe. So the Stock 600 up by 0.4%. Hermes from the luxury space selling more and more handbags, it seems. China once again reopening is the core driver of that story, as well as US consumers. But the stock up by 0.9%. It touched an all-time high yesterday, along with LVMH on the back of the strong earnings from that larger rival. So price for perfection was the way that some analysts described the Hermes share price going into today's sales update, and they managed to surprise to the upside and go a little bit higher on the share price. A couple of assets moving around interest rate differentials, and this is interesting because we continue to get fairly hawkish messages coming through from ECB officials, and we're hearing something a little different coming through from at least some over at the Fed. And so that puts interest rate differentials, the path of hiking still ahead of us from the ECB, very much in focus. And that's what seems to be driving up these yields in Europe, in contrast to what we're seeing on treasuries. Not big moves, but certainly it's been a driver for a while and continues to be so. And also one of the drivers behind the euro, behind the dollar, behind the gold price that you showed earlier, Kriti. So the euro at 110.57, up 0.1% against the US dollar.
Yeah, certainly something we're going to keep an eye on. It's interesting. We're almost reversing a lot of the market moves that we saw in last year. Let's see how long that lasts. Joining us now, Zoe Gillespie, investment manager at RBC Brewin Dolphin. Let's start there, Zoe. I want to really talk about the currency picture and how it kind of floods into perhaps the stock market, the bond market, the commodity market. Are you at all concerned about how quickly the dollar may decelerate?
Well, obviously, if you do think that you're going to get the peak of rates, then certainly the dollar may start to weaken if we do see that we are nearing the end of the cycle. And we think that potentially we may be getting there. I mean, the market's kind of potentially pricing in a 25 basis point kind of hike in May. So, and if it does start to kind of peak at that, then we may see some dollar weakness. And certainly other currencies have started to pick up against the dollar, obviously, over the last few months, and we see that trend potentially continuing if rates do peak.
Yeah, a defensive bid certainly into the markets. You're seeing it in the bond market, the gold market, as you just pointed out, and of course in the tech space as well, with tech making most of the S&P 500's rally in the last couple of weeks. Zoe, when we look at the gold prices specifically, is that a move that's justified?
Well, I think it's obviously a defensive play, and I think it probably gets into the sort of narrative that the recession may start to hit sort of in the second half of this year. So I think a defensive play as well. So gold has actually rallied on that. So I think it maybe shows there is some nervousness still in markets just now.
Yes, indeed, some nervousness, but a lot of strength in some sectors. And Zoe, I just want to focus in on the luxury sector with that in mind. Results from LVMH yesterday, results from Hermes today, both of those driven by strength in China, of course. But it's interesting that I was talking to someone from Goldman Sachs earlier who was saying that consumers in lots of parts of the world are actually doing better than maybe the interest rate story might have led us to expect right now, because unemployment rates have stayed so low. And so as a result of that, the consumer is stronger, and so consumer spending holds up. Is that something that you see rippling through your strategy?
Yeah, I mean, I think the luxury goods story has been one that's played out this year, and I think the reopening of China. And interestingly, demand was strong also in Japan and in Europe. It was only potentially a bit weaker for LVMH in the US. So the story is still there for the high-end goods. But I think if you look at kind of certainly results yesterday from Tesco, which is at kind of level for general consumers, there's margin pressure there. So it seems to be the demand for luxury is probably the sort of playing out from the kind of China reopening story.
It's sticking with the UK, as you've taken us to that part of the conversation, Zoe. I know that we got inflation data in the UK that surprised even the Bank of England pretty materially. We got confirmation of that from the chief economist, Hugh Pill. He was also saying that he thinks that the tight labour market could lead to a positive demand shock. What would the impact of that be, do you think, for the UK?
Yeah, I mean, I think we've seen sort of inflation still being quite high in certainly the UK, and I think we see it has taken longer to cool. So I think we are potentially going to have more interest rate hikes, which you will going to see sort of, I think, weaker demand. And as an economy, we are forecast to sort of dip into negative growth soon. So I think demand could certainly cool in the second half of this year. But the labour market, to be fair, has remained fairly resilient, which is why it's kind of difficult to call.
Well, Zoe, we're starting to see a little bit of a pickup in inflation, although perhaps not one that's as concerning as what we saw in 2021 and 2022. But there are markets around the world where inflation is almost turning around, where it's not decelerating. It's not going in a one-way direction. Spain, France, Brazil even is dealing with them, Indonesia even. Are you at all worried about that hitting the more developed markets, the US, the UK, and I mean, I'm going to say France. France is a developed market, but you know what I'm saying. Are you worried at all about that possibility?
Yeah, well, the IMF this week have come out and said that they expect inflation to be higher globally. So I think their forecasts have changed a little from January. So the prediction is that inflation is going to be here a bit longer. And I think that plays into the kind of how central banks deal with it, and whether we are going to see the rate hikes continue, and whether rates are going to be higher for longer. At the moment, it feels that inflation is certainly cooling in the US, but it's certainly still there and it's still very sticky. So we are starting to kind of feel that I think this may play into the kind of what the central banks are going to do, and whether we are going to see, as I say, rates higher for longer, which at the moment the market's kind of, the strength this week we've seen in US equities, in particular Nasdaq, the narratives may be slightly kind of contradicting that just now. So it's going to be interesting to see how it kind of plays out in terms of sort of inflation versus what the Fed's going to do.
And what are you expecting to see in the earnings season then, Zoe? What will you be watching for? We get the bank earnings season, of course, kicking off today.
Yeah. I think the banks is going to be obviously key to see what level of deposits and certainly outflows are going to look like, as well as margins. And I think it'll be interesting to see what their kind of outlook statements are, because obviously the data is going to be kind of backward looking, but we may get some sort of indications from the statements as to the sort of outlook for banks. And then obviously next week we've got the tech sector, which has had a really good rally this year. So it's going to be interesting to see how the results play out, and whether it's actually on sentiment or just fundamentally there is an improved kind of narrative in the tech sector, and we're going to see sort of that coming through to looking at margins and looking how they've been able to absorb potential cost increases as well, which was a big factor last year.
Zoe, thanks very much for your time. Zoe Gillespie of RBC Brewin Dolphin, thanks for joining us. Coming up on the programme, we'll stick with that theme of earnings and focus in on the bank sector. We'll talk to someone who owns a number of banks. Greenwood Capital CIO Walter Todd is underweight versus towards the banking sector compared to others, but still has some holdings there and some interesting insights to share. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with the Wells Fargo CFO, Michael Santomassimo. That's at 2 p.m. New York time. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Preeti Gupta in New York with Anna Edwards in London. Matt Miller is off today. The largest U.S. banks set to kick off earnings season with JPMorgan, Citi, Wells Fargo all due later today. Bank stocks looking historically inexpensive. Reports from key lenders over the next 2 weeks are going to help investors gauge if the sector's too cheap to ignore or too risky to touch. Joining us now is Walter Todd, CIO at Greenwood Capital. His company holds positions in Bank of America and JPMorgan. Walter, a pleasure to have you on the show. Thank you for waking up bright and early. Let's start there. Are these companies too risky to touch?
Well, good morning. Glad to be here. I don't think they're too risky to touch, but I don't think you want to be necessarily overweight the financial sector as a whole. I think there's, the stocks have obviously, particularly the regionals, have been hit very hard. Some of the bigger banks, not as much. So I do think there's some value there, but I just think it's going to be a tough road as we look forward for the remainder of this year and into 2024 as economic growth slows.
Walter, talk to us a little bit about deposit flows here, because it feels like the no-brainer of the regional banks, some of these regional bank collapses, is that deposit flows in the larger banks are going to skyrocket, are going to jump. Are we at all worried about some sort of reversal of that?
Yeah, so we've seen net deposit flow out of the banking sector as a whole, and that's actually not a new phenomenon. It's actually been happening since kind of the middle of last year as rates moved up, as the Fed raised rates. But it definitely accelerated as rates hit about 5% earlier this year. And like you said, regionals have taken it on the chin, and they're going to have to raise deposit rates. And so that's one of the challenges for banks as a whole, is that spread, that net interest margin that they've benefited from for so long is actually going to start to shrink. And we heard that from last quarter. So I think the bigger banks are going to continue to see net deposit flows into those institutions, and I don't see that reversing anytime soon. But the profitability of the banking sector is going to be pinched as they have to raise deposit rates to try to stem the overall outflow of deposits.
Yeah, I wonder which part, good morning to you, Walter. I wonder which part of that story we should focus on. Should we focus on the flows from small to large, or the flows from the sector as a whole to money market funds? I guess it depends where in the banking sector you're exposed to.
Exactly. Yeah. What banks do you own, and how are they seeing their deposit flows? I mean, that's definitely going to be a question that every bank gets asked on their quarterly call. They're going to be asked about, you hear this term deposit betas, which is how quickly they have to raise deposit rates relative to overall rates. And then what they're seeing from a deposit flow standpoint. We saw, for example, with Western Alliance, when they gave an update but didn't provide an update on their deposit flows, that the stock got hit very hard. So I think it's going to pay for management teams to be open about what's happening in real time, so that investors can get a better sense of what's going on. Because to this point, we just haven't seen any real details, and we'll get those in the coming week.
So we look for that. We also look for any guidance around credit conditions, the extent to which the banking sector is still willing to extend credit, and to whom, Walter. I wonder what you're going to be looking for there. We heard from Janet Yellen. She was not too concerned about what she sees developing there. I think Lael Brainard had a slightly different take, more concerned about what she'd been seeing in terms of credit being extended to the real economy. What will you be watching for in the conversations with bank executives there?
Yeah, so I want to hear about what they're seeing from a loan growth perspective, from a demand perspective, for one, and then two, obviously, their willingness to lend. We know in the senior loan officer survey that we haven't gotten an update on since the banking stress was already elevated. In other words, credit conditions were already tightening before the bank failures that we had. So you would expect that's going to get even tighter. So I want to hear from the management teams on kind of what they're seeing and what they're doing on a real-time basis. But I think it depends on your outlook for the economy. If you look for the economy to slow in the second half, you got to imagine that credit's going to become a problem, a bigger problem as we move through 2023 and into 2024.
Well, Walter, it's interesting that you talk about profitability for some of these banks. I want to talk about the trading revenue specifically, because as we're talking about this banking turmoil on the regional basis, globally even, what was going on with UBS and Credit Suisse, bond volatility has gone off the charts. Is that going to feed into trading profits?
Well, we'll see. Interestingly, you had Truist, which is kind of a super regional bank, eliminate their trading in mortgage-backed securities and agency bonds yesterday. They let go about 80 people. But I think some of the bigger institutions like Goldman Sachs and Morgan Stanley will probably benefit from the volatility that we've seen in the fixed income market. I mean, Goldman's traditionally been the best at that. So that could be a little bit of a tailwind for those companies. But overall, the lending business and the deposit business is where the squeeze is going to be.
And talk us through where you see opportunities in the banking sector. So we talked about it for sort of holistically and mentioned a little bit about where you see exposure. But where do you see, in the midst of all of this turmoil, Walter, I hear that you don't want to be overweight the sector, but are there areas that you think are maybe have been oversold and look interesting to you? Yeah, so I think, in our large cap strategy, right now we own JPMorgan and Bank of America. So those are I think the safer institutions, particularly JPMorgan and its balance sheet. But Bank of America is very inexpensive, could be challenged a little bit here in the short term, but we like that longer term. We've held it for a long time. When you look at some of the regionals, we're in the Southeast. I think a lot of the regionals in the Southeast have a lot of tailwinds economically that other parts of the country may not. So we like some of the regional banks that are located here in the Southeast, and we own in our dividend strategy, for example, Truist and Regions Financial as well. No doubt some of the conversations with banking executives, Walter, will focus on what went wrong during March and what can be done to put that right. Where will the focus be for you? I mean, regulation is going to be something that will be talked about. Also, the actions taken by those who run the financial system, I suppose, Walter.
Yeah, I know that the president of the New York Fed tried to say that their increases didn't have anything to do with the banking stress. I think that's sort of ridiculous. It certainly had contributed to it, but definitely I think the question for management teams of banks is going to be, how is your asset liability match? Because that was the real issue with Silicon Valley Bank, was they went out too far on their security investments and the mismatch with their loans and deposits. So I think that's going to be the focus on these earnings calls for management teams.
Walter, thanks so much. Thanks for joining us. Walter Todd of Greenwood Capital with his thoughts on the banking sector. Coming up, France's Constitutional Council decides on President Macron's plan to raise the French retirement age. That will happen today. We'll be live in Paris next with a preview. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Matt Miller is off today. Now, later on today here in Europe, France's Constitutional Council will rule on Macron's pension reform. The controversial plan to raise the pension age to 64 has faced mass protests over the last, months, in fact, across France. Joining us now is Bloomberg's Caroline Conan in Paris. Caroline, good morning. What exactly is at stake then today as we hear from this court and we get the court's verdict on what President Macron is trying to do?
A lot is at stake, Anna, because the Council is going to rule on the entire pension reform. So that reform could actually just go away. And that would be, of course, a big blow for President Emmanuel Macron, because that's been part of his political campaign since he was re-elected last year. Another thing that the Council is going to rule on today is whether we should have a referendum on this entire pension reform. That will then start a process where the opposition Macron will have to get about 10% of the French electorate to sign, so that's nearly 5 million people, in order to organize a referendum on it possibly next year. It is very unlikely that the Council will reject the reform entirely, but it is possible that they will reject part of the reform. And of course, if they approve it, for Emmanuel Macron, it is also kind of an exit strategy. It gives him an opportunity to kind of turn the page, and it will be more difficult for the unions to continue the protests. You see these pictures of the protests yesterday in front of the Constitutional Council. Today, it's been barricaded. No protests around the council has been allowed by the police.
Well, I'm glad that you mentioned the protests specifically, because we've seen them from various groups of people. I think the most recent, the image that sticks in my mind, was sanitation workers specifically. Talk to us a little bit about what groups, what demographics might continue the protests.
So, of course, these groups, you have actually a big part of the population who feel that they are left behind, who feel that they will actually lose some money as part of this pension reform. And, of course, the left-wing parties, the opposition parties at the National Assembly are very much joining these protests, and all the unions, the 8 main unions in France since January. But as you can see on this graphic, the turnout actually has gone down. Yesterday, you only had about 380,000 people in the streets. That's compared to 1.3 million at the peak of the protests early March. But you have some symbolic actions. For example, yesterday, some railway workers stormed into the LVMH headquarters in the very fancy neighborhood Avenue Montaigne after they stormed into BlackRock last week. So we expect more of this kind of symbolic actions today on the sidelines of these Constitutional Council decisions. And the next big day of protest is planned for May 1st, which is, of course, the traditional Labor Day protest.
Yeah, those last pictures you saw there, as Caroline was just mentioning, the protesters arriving at the LVMH headquarters. Bloomberg's Caroline Conan, thank you very much, joining us there from Paris. The focus for markets, though, Kriti, is going to be on the banking sector, on the US banks, the flow of deposits. Interesting to hear from Walter earlier. Deposit betas is what he's focused on. How fast will those rates have to rise to keep hold of those savers?
Yeah, and that's just not the only piece. Remember, we're still talking about loan loss provisions, the highly awaited comments from JP Diamond, of course, trading revenue as well. A lot baked into this report.
Yeah, a lot to focus on as we get stuck into the bank earnings season then. Starts today, continues into the days ahead. That is it for Early Edition. Surveillance is ahead. Have a good Friday. Have a good weekend, everybody. This is Bloomberg.